Hi everyone, this is Hector. Welcome to a new video of this Forex trading course. In this video I'm going to be talking about triangles, alright, or actually about breakouts of a triangle formation, okay, of a triangle price formation. Firstly, let me define what a triangle actually is. A triangle is nothing but a consolidation area, okay. It's basically a sideways price action that it's taking shape of a triangle, obviously. Sooner or later the triangle is bound to break, okay, in either direction, and that's the breakout we are going to try to profit from. All right. Basically, the way I see triangles, the way I always explain them, actually a triangle or any type of congestion area is basically price needs to take a breather. It needs to slow down a little bit before gathering momentum enough to continue with a whole new swing. Hopefully in the direction of the main trend. As you guys know, I am a conservative trader, I am a trend trader, and that means that I will only take breakouts of a triangle or breakouts of any price formation that take place in the direction of the main trend. If as example, if we have a downtrend at some point in the trend, I spot a triangle formation, any breakout against the trend will have me canceling the whole setup, okay, definitely not taking any entry, and furthermore probably canceling the whole setup altogether. I will only be looking to trade breakouts in the direction of the main trend. More often than not, the trend, if it is a strong trend, a solid trend, usually finds its way around to push price to break in the direction of the main trend. That's what usually happens. Nonetheless, like I say, sometimes we do get breakouts against the trend, and I will never take those trades. Okay. There are different type of triangles depending on how what type of shape, how they shape up on your charts. Basically, we have flat top triangles. Okay, basically it's a triangle where price, once it gets within the consolidation area, it bounces up and down within the triangle boundaries, and you see different swings topping out at the same price level, okay, whereas the lows of those swings are not following sideways, are not falling in a straight or horizontal line, but are actually on a sloping line, okay. Moreover, the opposite also holds truth. We can have also a flat bottom triangle, okay, in where price, once gets into the triangular consolidation area, you see different price swings, different candles or swings altogether, bottoming out within in a straight line, whereas the highs of those swings are actually leaning down, okay. And eventually you have the third type of triangle you can have is basically all the rest, okay, where both of the lines, both of the boundaries of the triangle are basically leaning onto each other, okay, one pointing up and the other one pointing down, okay. It does not have to be a perfect triangular formation, okay. It can be a leaning triangle. Well, not that would have been a flat bottom triangle, but like I say, perhaps you might have one of the trend lines leaning heavily, and then the other one not so heavily, okay, some sort of of a down I don't know really how to say this, a downward pressuring triangle, whereas like I say, the triangle top is showing a higher degree of angle, okay, of inclination than the lower band. Anyway, enough talking. Let me show you what triangle actually is on the charts, and you will get the idea right away. Okay, in this video I'm going to be showing you, like I say, different type of charts, each of them showing different type of triangle formations. First of all, let's start with the GBP against the American dollar of the daily time frame, and I want you guys to look at this portion of the chart. Okay, as you can see, price comes from a clearly down move, all right, then enters a period of sideways consolidation before breaking below for a whole new swing to the downside. As I was saying before, sometimes as price moves heavily into one direction, bears and bulls need to take a breather. Okay, the market needs to reassess the situation and before breaking out into either into either direction. I would only take the ones that break in the direction of the previous of the overall market sentiment, which in this case it's clearly down. Okay, clearly down. Okay, in this case we can see a triangle in the central part of the chart. Okay, it's the one I'm marking right now. Actually, I'm gonna mark it in blue in my screen, and as you can see, it's not either a flat top triangle or a flat bottom triangle. Okay, it's just a regular triangle. Okay, there we are. Basically, as I was saying before, price swings down, takes a breather. The bulls and the bears sort of come into an agreement, at least for the time being. All right, before deciding, as the price nearest closest into the vortex of the triangle, it is always bound to break to one way or the other. It cannot keep on going sideways forever, right? It's got to break to either one side, and more often than not, as I was saying before, if we are in a sound trend, it usually, like I say, breaks in the direction of the previous move, right? Meaning if we were coming into this consolidation area from above, most often than not, it should break. If this is a strong trend line, a strong trend, sorry, it should break in the direction of that trend. Okay. Excuse me. Now, there are different ways of profiting from a triangle. Okay, I'm gonna explain you the way I personally trade triangles, the way I personally like to profit from them, if I can profit from them, of course. And I'm gonna be doing that by zooming into the shorter time frames. As you guys know, I usually check two time frames. One is the time frame what I call the setup chart, which is basically the time frame in which I spot the price formation. Okay, the chart in which the trend clearly shows itself. In this case is the daily chart. Okay, once I have the pattern identified, then I zoom into what I call the trigger chart, which is usually the smaller or the shorter time frame, let's say 4 times shorter or 6 times shorter than the setup chart. If for example, in this case, the setup chart is a daily, so I would zoom into the 4 hours time frame in order to spot or to search for my entry. So now I'm zooming into the 4 hours time frame. I am scrolling back in order to find where exactly I left the if I can possibly find it, which I don't know where it's gone. Give me just 1 second. Okay, I don't know really how. Okay, one second, guys. I'm gonna stop the video and I'm gonna find my triangle. 1 second. All right, there it is. I had lost it. Okay, so as I was saying, price clearly gets into this consolidation area, bounces up and down within the triangle boundaries, basically moving sideways, as you can see, but also tightening in, okay, with higher lows and lower highs. That means that basically it's squeezing in within the triangle, okay, gathering momentum until the it closes in the vortex area, and from that, it's bound to, as I was saying, to break to one of the sides. Since we were coming from a downtrend, okay, from a down move into the consolidation area, I would only look to try breakouts in the direction of the overall market sentiment, which in this case it was clearly down. All right, the way I personally tried excuse me, the way I personally try triangles is the conservative way. There are two ways of possibly trading a triangle, or actually any type of breakout. I'm going to show you both. I'm going to show both ways to you, and well, you can decide whichever you think it suits your trading personality better. All right. First of all, let me show you the aggressive way. The aggressive way is basically triggering upon a simple the initial breakout of the actual range bound area. Okay, that means that we would place a bracket order a few pips beyond the boundaries of the triangle. In this case, only the lower end of the triangles, is we are only trading in the direction of the main trend. Okay, we would basically place a sell stop order, okay, which I am marking right now. Let's mark it, let's say, in green. Okay, in our broker we would place a sell stop order a few pips below the triangle bottom, let's say 10 pips, 20 pips, depending on the time frame. Of course, if it's at the daily chart, we need to give it a little bit more of breathing room. If it's the 15-minute chart or the 30-minute chart, if we are trading the very intraday type of trade, that would only be a few pips, perhaps 5 pips, something like that. But nonetheless, it depends on the time frame. But at any rate, we would simply place a sell stop order few pips below the lower band of the triangle, okay, and as soon as price breaks through, our broker will automatically fill us in the market. Okay, it's as simple as that. We wait for no confirmation, we wait for no further signal other than the breakout in itself. Okay, that's not the way I personally trade breakouts, because sometimes we see what I usually call a fake out. Okay, a fake out is nothing but I always say that markets are not perfect, swings are not perfect, and they usually don't respect levels of support and resistance right to the pip. Okay, also you've probably heard about stop loss hunting by large institutional players. It's basically the people who trade large amounts of capital. They push price very quickly into one direction, they shake out many stop losses, and then they let it continue on its merry way, the way in the direction it was meant to go. Okay, so basically they artificially spike price, very briefly for 1 or 2 bars. They hit all those stop losses. They shake all the weaker fishes out of the pond, and then they let the currency pair go on its merry way without all those small traders, since they kick them out of the market with that random spike, okay, they create. Anyway, so if you trade aggressively, basically placing a sell stop order few pips below the lower boundary of the triangle, sometimes what we see is a quick dive below the boundary just enough to perhaps trigger your entry, and then it goes back into the triangle in itself, okay, back into the triangle consolidation area. As I'm saying, that happens more often than you would think, okay, and it can be really nasty and really frustrating, because basically you are clearly spotting a nice down move, then you're spotting a triangle formation, a consolidation area. You place a sell stop order few pips below that, and price basically fools around with you. It dives down, hits your sell stop order, you are filled in the market short, and then it simply snaps back up, you know, within the area. You are already in the market and the breakout has not confirmed, okay. That's in my opinion, as a conservative trader, that's a situation you don't want to see yourself involved with, okay. Many times it does work, okay. Like I was saying before, most of the times the breakout does happen in the direction of the main trend, okay. So it does happen. However, in my opinion, it's just not safe enough to just simply trigger your trade as the triangle gives way. I like to wait for a breakout, for a confirmation of the breakout, and that confirmation usually comes with what I call the breakout pullback continuation pattern, okay. Now please, I want you to have a look at this part of the chart, okay, right as the breakout takes place. Actually, let me zoom in a little bit for a clearer view. There we are. Basically what we have is a breakout, okay, below the boundary of this, the lower boundary of this triangle, and from there, if you have a close look into the chart, you will see two green bars, okay, this bar and this bar, all right. That's the pullback part of what I was mentioning before, the breakout pullback continuation part, okay. Basically, price breaks out from that consolidation area, then it pulls back to retest former levels of support, in this case the lower trend line, the triangle bottom, all right. It was working as support here, and then once broken, it turns resistance, okay, which is what actually happens here. It's nothing but former support turn into resistance. I'm sure that's a trading principle you've heard a number of times, and it's actually true. So it's actually true. It does work, okay. It does work like that way. You see the breakout, then you see a pullback retesting previous support levels, now working as resistance, and once that resistance is confirmed, once price tops out at that level and continues to move in the direction of the original breakout, there is where you trigger your short entry, because, well, the market has already given you confirmation that the breakout has, it's a valid and it's delivered through, okay. In this case, the short entry would have been triggered just as we pipped a couple of pips below the breakout thrust, okay. Any breakout pullback continuation pattern, it's formed by three parts, okay. The breakout thrust, which is this initial breakout, then the pullback I was just mentioning before, retesting previous levels of support, now turning to resistance, meaning this trend line, okay, the lower band of the retracement of the triangle bottom, and from there we have the continuation part, which is basically a new swing in the direction of the initial breakout, signified by those red long bars, okay. So as we peep below the breakout thrust, this being the breakout thrust, guys, this being the breakout thrust, guys, this being the breakout thrust, then this being the pullback, and this being the continuation. All right, sorry to repeat that so many times. I just want you guys to understand this this concept very clearly, because it's basically one of my main trading tools, so I really want you guys to understand this. So as we make a new low, this being the low of the breakout thrust, okay, as we take out up on the pullback, okay, after the pullback, once we continue moving down and we make a new low below the breakout thrust, that's where I trigger my short entry. All right, right there. Right at that level. A couple of pips is usually good enough, okay, no need to wait anymore. You've had already the confirmation in this shape, in this pattern, so as you make a new low right there, a couple of pips below, you can enter short in the trade, knowing that you're taking a high probability trade for a few reasons. First of all, let me zoom back out. First of all, you are trading in the direction of the overall market sentiment, which, as we saw on the daily chart, is down. Okay, we had a nice downswing, a period of consolidation, and another downswing. Okay, the overall market sentiment is to the downside. Okay, that's the first reason as of why you are stacking up odds on your favor. Right, first of all, like I say, the trend. You are trading in the direction of the main trend. Second, you are trading a breakout in the direction of the main trend. Right, you are just not taking a trade out of the blue. You are taking entering a breakout in the direction of the main trend. Once the consolidation area decides to give way, you don't take the trade here or one second, let me clean up the chart. You don't take a trade here or here or here or here. No. You wait to the breakout. Okay, you only enter the trade once the breakout has given way. Okay, sorry, once the triangle, the consolidation area, has given way. Okay, so it's not like you are taking an entry blindly. All right, you are waiting for the right time to take your entry, and always in the direction of a main trend. And finally, the third reason as to why this type of setups are a high probability trade is because not only you are trading in the direction of the main trend, not only you are waiting for the right time to enter the trade, but also you are waiting for the confirmation of the breakout. Okay, the confirmation comes, as I was saying, in the breakout, pullback, continuation pattern. Okay, it shapes up as that once you confirm that previous levels of support becomes resistance. Once that's been confirmed, and once after the breakout, you get 1, 2, 3 bars, green bars in this case, since we are trading short, we are leaning towards the short side of this trade. Once you get few green bars, sometimes it's just one bar, one green bar, and therefore it's a 1 bar pullback. Sometimes it's 2, sometimes 3, but not usually more than that. Okay, a good breakout should not need more than a few bars. The whole breakout, pullback, continuation should not be formed by more than, I don't know, let's say 5, 6 bars, no more. Okay, you want it to happen in momentum. That means that you want it to happen fairly quickly. You don't want price to break out, then meandering around for a little while, and then very slowly continue to move down. Now you don't want that. What you want it's a clear breakout, then perhaps 1, 2, 3 bars pullback, and then another momentum thrust in the direction of the main trend. That momentum thrust is the most important of all. Okay, you need a clean breakout. You need a breakout in momentum. In this case, we can clearly see that we have a nice red bar in the direction of the breakout. That means that sellers are outnumbering buyers. Okay, and that's why you get large massive bars in this breakout. That's a nice indication that the breakout is going to deliver. Okay, that the breakout is going to deliver. Okay, that the breakout is going to go through, and it's not going to fizzle away at some point of the midway through. Okay, if you have a look here on the next swing, also you have a few bars as a pullback, and then bang, another nice momentum down, and also you have the same indication few bars later. Okay, a little bit of a pullback, of a consolidation, and eventually bang, the bears come in play again with another large bar. Okay, we gotta read price action, guys. Price action is very important. Momentum reading, especially when it comes to breakouts, are important. And in this case, that signified when we have either the breakout or the continuation part in high momentum, meaning long bars. That's the best indication you can have that the breakout is going to be a valid one, and you want to be riding that breakout always in the direction of the main trend. Okay, please guys, memorize by heart the breakout, pullback, continuation part. Train your eyes, go through your charts, scroll down, scroll back in time in your chart, try to spot out previous breakout, and try to search for this type of breakout, pullback, continuation patterns, because whenever they happened, they usually give way to a very nice move. Okay, and very quickly, have a look at this. Okay, have a look at this move. Very nice, swift, and painless free trade. Sometimes, of course, sometimes price doesn't quite give you the breakout, pullback, continuation. All right, sometimes price simply plummets through, okay, drives through the triangle boundaries, and well, it just simply moves 100 pip without giving no pullback whatsoever. But that's the cost of being conservative. Okay, at the end of the day, we gotta decide whether we want to be aggressive traders or conservative traders. Being a conservative trader means that you will miss out on many trading opportunities. You will let many trading setups go, but those ones you will take will carry a higher degree of win-loss ratio. Okay, in my opinion, that's important. I want to know that those trades that I do take carry a 65, 70, 75% of win-loss ratio. All right, of chances that the trade is actually be a winner. I'd rather miss out on few trades, making sure that those trades I take, like I say, I'm having the chances on my side. Okay, so that's basically it for this type of breakouts. Okay, just recapping a little bit, two ways of trading: simply placing a sell stop order few pips below the triangle lower boundary, or upper boundary if we were in an uptrend, but in this case, since we were in a downtrend, few pips below the lower boundary, we place a sell stop. Once price breaks out, we will be automatically filled in, hopefully to ride for a new swing down. That's not the way I do things. I like to wait for the breakout, pullback, continuation as signified in this part of the trade, and always it is a nice plus, okay, a nice bonus if you see the breakout and the continuation signified on your charts by long red bars, okay, such as it is in this case. It means that the breakout is being delivered in momentum, and it has higher chances of moving through in your direction. Okay, and therefore, handing out some pips in the long term. Alright, now I'm going to be showing you now another type of triangle. Remember that at the beginning of this video I was talking about flat bottom and flat top triangles. Well, in this case I'm going to be showing you a flat bottom triangle, okay, which is basically marked here in my screen. That would be I'm going to mark it in blue. That would be the bottom of this triangle, and then marking the top part, the top band of that triangle. Okay, there we have it. It's basically, as you can see, we have 1, 2, and 3 bars, 3 different swings, if you wanna see it that way, bottoming out at that precise level, same level, and then we can clearly see that from there we are making lower highs. Okay. Also, price swings down into the triangle formation, and therefore I would only be looking to trade breakouts to the downside. If this triangle gives way to the upside, the whole thing would have been cancelled. Okay. In my opinion, flat bottom triangles or flat top triangles are the same thing. Flat bottom triangles are I like them better than regular triangles, and I'm gonna explain you the reason as of why this is the case. Basically, if we have a downtrend, okay, a down move into the consolidation area, and we keep making lower highs, okay, within the triangle, we are basically building up pressure. Okay, the bears are building up pressure onto the bulls at this level, okay, at this price level. Basically, what happens in this type of cases is that the bulls are, this is the bulls' last line of defense, and the bears keep unleashing attacks to this level, okay, and the bulls reject them once, reject them twice. The bears try to unleash another attack. The bears defend that level, the bulls, sorry, defend that level once again, but eventually the pressure, okay, keeps closing in and closing in and closing in, and eventually the bulls cannot keep up anymore. They cannot defend that line anymore, and well, they give way, and a whole new swing to the downside in the direction of the main trend it's created. Okay, so basically that's the idea, okay, the logic behind this, what a flat bottom or a flat top triangle is. Okay, always remember, in the direction of the main trend you have a clear level that's working as the bulls' last line of defense. This is the key level to keep an eye on. Okay, this is the main level you want to set your sound alarms to. Okay, perhaps a couple of pips below that, and from there simply follow whether you are making lower highs. Okay, if you're making lower highs, the pressure is definitely being built onto the downside up on this very level, and once it gives way, well, you are good to go to search for a short entry. Just as I was mentioning before, basically 2 ways of trading this thing. Simply placing a sell stop order few pips below the triangle bottom, and once the breakout happens, you are in the market, automatically in the market. As usual, I like to wait for the confirmation. In order to do that, I zoom into the shorter time frames. In this case, it's the 1 hour time frame, since the setup chart was the 4 hours chart. That means that I will look to enter the trade in the hourly time frame. Okay, basically now you can see here that we have the same setup as I was mentioning before, the breakout, pullback, continuation, and also it follows the same nature. Once that level gives way, okay, this level, the triangle's bottom, it breaks out in momentum. You can see how we have few different, few consecutive bars on red color. Okay, no green bar there whatsoever. It's a clean breakout. Then you have 1, 2, 3 bars in green, which is signified by these 2 bars in this case, retesting former support levels. Okay, this level, okay, this triple bottom, that was basically before the former support level, and now once broken, it becomes resistance, and as you can see, price tries to pull back to that level. It finds resistance there, and then once again we have the continuation part of the breakout with a long red bar. Okay, a long momentum bar, it means that bulls are definitely in control. Not only they've been building pressure all throughout the triangle, building pressure, as I was saying before, to the downside, but they've had a clean breakout. Then we see a couple of bars of pullback, and then bang, another long red bar. Okay, and once we take out the breakout thrust, meaning this breakout thrust, okay, once we take out this low, a couple of pips below, right there, it's our signal to enter short. And as you can see, well, it was a profitable trade. Basically it's the same type of setup, okay? The regular triangle or the flat bottom triangle, it's basically the same thing. It's just that I like, or I prefer, or I favor flat bottom triangles in a downtrend better than regular triangles, because there is one very clear level to keep an eye on. It's so much easier to try this type of setups when you have a leaning triangle, you know, a regular triangle. This level is it's not a straight line, it's not a clear level you want to keep an eye on. So once it breaks out, then you just simply wait for the pullback and bang, off you go. Very simple. Here, whereas it's basically the same principle, the former support level, once broken, as I was saying, turn into resistance, is not as easily definable, okay, because it's a leaning line, okay, it's a trend line with a slope, and therefore it's not so easy to keep an eye on. That's why I prefer to see flat bottom triangles in a downtrend. In fact, it's one of my favorite trading setups. Okay, I like to keep an eye out for these type of setups because they are high probability chances and they are very easy to trade. You know, simply spot how price makes lower lows. You get the breakout, and once the pullback is finished, you know, simply place your sell stop order few pips below the couple of pips below the breakout thrust, and you're good to go. You've got nothing else to do. Of course, if once price breaks out, the pullback goes all the way within the congestion area, meaning the triangle. If it goes once again, then the breakout is not as clean anymore. Remember that the confirmation of this type of setups comes in the shape of former support now working as resistance a little bit farther on in time. Okay, former support, guys. Once it breaks, it turns resistance right there. Okay, that's the confirmation of the breakout as it makes new lows right there. Therefore, if after the breakout, okay, if after this breakout price shoots back up into the congestion area and therefore not respecting this previous level of support as resistance, okay, that means that level, even though it worked as support, later on it did not work as resistance, and therefore the breakout is not clean anymore. Okay, you may want to let that breakout go, even if after that, well, you know, it might keep on going down or up. You never know. You never know in Forex what might be next. But what it is important is that the level you were keeping an eye on, the key level on this setup to keep an eye on, like I say, the flat bottom triangle's bottom, it just didn't work as resistance, and therefore the breakout was not confirmed. Okay, you might be indeed facing what I was saying before, a fake out. Price dives down, you know, some stop losses or some orders are hitting the market, and the large players simply push price back up, okay, in order to generate some losses to those people. So like I say, it's always nice to see that it's always nice to see that the key level on this setup is respected upon the pullback, okay, and from there to see a momentum bar in the direction of the breakout. Once that happens, if all of those elements do happen, you have all the chances on your side in order to score a nice profitable short entry. Finally, I'm going to be showing you what a flat top triangle is, okay? As I was saying, it's basically the same thing. It is clearly seen in this chart. Oops, 1 second, let me define that properly. Okay, there we are. That being the flat top triangle's top, and this being the bottom. As you can see, we make price comes from below, okay, enters an area of consolidation, basically of sideways price action. We have different bars, different swings topping out at this level, okay, whereas the lows for those swings are they make consecutive higher lows, okay. Basically we have the lows forming an up leaning or up sloping trend line, whereas the highs simply make a horizontal line. That means that these are the best last line of defense. The bulls keep charging on all the way up, okay, trying to, or effectively building up pressure to the upside into this key level, and once that level gives way, well, it's green lights to ride the new swing for a profit, okay, as we can see here. As I was saying, it's basically the same thing as the flat bottom triangle. We have a very clear level of reference, a clear level that you want to keep an eye on, not only for the breakout but also for the pullback once that happens. And as usual, the breakout we will look for the pullback continuation pattern, breakout pullback continuation pattern in the trigger chart. Since our setup chart is the hourly time frame, I will search for my entry on the 15-minute chart. Always remember that my setup chart, actually my trigger chart, is 4 times shorter or smaller than my setup chart, okay. So since this is the 1 hour time frame, I will zoom into the 15-minute chart in order to search for an entry. All right, let me try to find, there it is, there's the triangle. Okay, let me redefine a little bit better the lines. There we are. So as you can see, basically we have a breakout, okay, then we have a pullback and a continuation. In fact, in this case, our trade was triggered right there. Our long trade was triggered right there. This being the breakout, then we have a one long red bar, okay, retesting the triangle top. In fact, it overshot a little bit. Let me zoom in a little bit so you guys can see that better. Okay, right there. In fact, it overshot a little bit, as we can see on this chart. Okay, we had the breakout. Then we were keeping an eye on this previous level, on the previous flat top triangle stop, in order to wait for a pullback, and from there search for a long entry. We did get the pullback, all right, signified by that red bar. And as the continuation part took place, right there we were triggered long in this market, okay. Stop loss would have been placed down here below the breakout pullback continuation thrust. However, I don't want to get into stop losses, into stop loss placement, because that's covered in another chapter of this trading course. All right, yes, for your information, it would have been placed down here. But like I say, don't pay too much attention now on the stop losses or profit takings, because that will be covered on future videos. Anyway, like I was saying, the entry price would have been right there. Price after that, in fact, retraces once again, and it found support once again to this level. Okay, that means that in fact this level was former support, sorry, resistance, now working as support. The setup is valid and we are good to go. As I was saying, our long entry is safe. Okay, that's the beauty of flat top or flat bottom triangles. We have a key level to keep an eye on. If that level gives way, we know that something might not be all right. Okay, here, like I was saying before, it overshot a little bit. That's not a big deal. As I always say, markets are not perfect. You cannot expect levels of support and resistance to be respected right to the pip. Okay, that never happens, or very rarely happens. Okay, but nonetheless, here basically up on the breakout and the pullback, it was just a very briefly, very briefly breached through. All right, immediately after it went back up. Once that happens and we make new highs right there, okay, we can we can label this breakout as confirmed, and we are good to go for the long entry. Even though we retrace a little bit after that up on the entry, that's the beauty of stacking up chances on your side. Eventually, even if you go through a small drawdown, or let's say a pullback, a retracement against your trade, the overall market sentiment in this case, remember we were in an uptrend. Okay, the overall market sentiment, the fact that we broke out in the direction of the main market sentiment, and the fact that we also confirmed the breakout with the breakout pullback continuation pattern, will eventually muscle most of the time price in our direction, and we'll be able to score a profit on this long entry. Like I said, I always say that trading is about stacking odds on your favor, and basically trading in the direction of the main trend, a breakout in the direction of the main trend, and with the confirming pattern of a breakout pullback continuation, it stacks up different chances, different odds on your favor, and that's the type of trading situation you want to be involved with when you have the chances on your side. So even if your trade gets a brief retracement, okay, against you, you are still carrying the chances on your side, and eventually that overall up mood on this market, this overall up momentum will prevail. And most often than not, sometimes you will score losing trades. Every trader scores losing trades here and there, but most of the times, like I was saying, 70, 65, 80% of the times of the trades will be a winner, and you'll be able to squeeze some profits out of this trade. Okay. Well, guys, that's basically it for this triangles. Always keep an eye, always keep in mind three different aspects. First of all, always in direction of the main trend. Second, only breakouts that take place in the direction of the overall market sentiment. And finally, the third aspect is trading the breakout, pullback, continuation, confirmation of the breakout. If you have those three elements on your favor, as I was saying before, you are trading with the odds stacking up on your favor. Okay, guys, that's all for this video. It's getting too long already, so let me close it down. If you have any type of question, please don't hesitate to send me an email. I will very gladly answer back all your questions. And always please remember that the most important thing in trading is experience and screen time. So it might be a good idea if you scroll back in your chart, try to spot a healthy trend, and then try to spot triangular formations, triangular price formations on those trending scenarios. in order to see how a breakout in the direction of the main trend would have played out. Okay, I'm sure you will find it very pleasing and very surprising how in the long term more trades than not would have become a winner. Okay, alright guys, that's all for this video. I will be seeing you on the next one. Bye bye. Hi everyone, this is Hector. Today is Thursday the 10th of May 2007. It's 2 p.m. Euro time, and I'm looking into what's been my favorite pair for the last few weeks, the Euro Canadian dollar in the 4 hours time frame. It's the one that's showing probably along with the USD Canadian dollar the best trend in a scenario, and I keep on exploiting it once and over again. If I enter once again on this trade, it will be my third trade on this chart in the last 2 weeks. I entered off this breakout right there. I made a few pips, then I entered again right here. I made another 40 pips a few days ago, and I'm looking into this triangle forming right now in the 4 hours time frame. I have it marked on my chart. Alright, I'm of course looking to try the breakout to the downside, a breakout thrust, a posterior pullback, and that would signal as we resume the downswing my short entry. Of course, any trade to the upside will mean that the trade plan is violated, and therefore I will take no entry. I definitely wouldn't take a long entry off a breakout to the upside, because that would be trading against the overall market sentiment and the overall downtrend. Alright, so price comes from a nice swing down. This is last week's price action. Alright, nice swing down, takes some time to breathe. Okay, hopefully the bears are just gathering some energy before releasing a new attack to new lows this week, probably perhaps into the next week already, since today's Thursday. I'm looking into a new swing position, probably for another 70 pips, which is the 70, even up to 100 pips, which is the height of this triangle. You know, the way I measure targets is measuring the height of the pattern to the breakout level. We should be around, should take me around 148.50. Okay, that's the trade plan. Also, what I like is that today's price action has been confined by yesterday's price action. Let's have a look. You see this purple, light purple square right here, blue square, whatever call it, whatever color that is. That's yesterday's price action. This square right here is today's price action. So as you can see, what happened today has been confined within yesterday's range. That's what textbooks or candlestick formation players call as an inside bar. Okay, you have a move, then you have the next day a smaller range, and within the previous day range, that signifies consolidation. Okay, market is gathering energy, perhaps still the market is gathering some energy, still hasn't made up its mind as of where it wants to break out, either to the upside or to the downside. If it does break out to the downside and therefore breaking this triangle, I'm expecting a new swing down, which is what I'm gonna try to ride on this setup. Alright guys, that's it. I'm going to pause the video. I'm not going to take any trade within the next hour or so, because even if the breakout occurs right now, which it doesn't because there's still a fair distance to the downside, but even if it did, there are some news coming out in half an hour on the Canadian dollar, and also we have the euro interest rate decision as well. So for the time being, I'm not gonna take any trade within the next 1-2 hours. I'm gonna pause the video and I will keep on updating once the news dust settle a little bit. I will reconsider the situation and see if we finally see that breakout to the downside that I'm hoping for. Alright guys, see you. Hi guys, this is Sector again. It's 3:15 p.m. It's been about 1 hour and a half since the last update. As predicted, we got a breakout to the downside. Okay, we have the news on our back, both the news on the euro and the Canadian dollar. And well, it's time to search for an entry. I'm gonna zoom. This is a 4 hours chart, by the way, so I'm gonna zoom into the 1 hour chart. All right, and let's see what we find there. Well, as we can see, let me redraw a little bit the triangle bottom right there. As we can see, we got a breakout. Then we are seeing the pullback now. And if we continue now on the move down, and we break this low, which was the initial breakout thrust, the bottom, all right, of the initial breakout thrust, this level, which should be 149.35, few pips below 149.32, more or less, that will signal my my short entry. What I like particularly about this setup is that we've just had the Canadian news, all right, and it's been Canadian bearish, meaning that the Euro Canadian, okay, this chart should be seeing a move up, all right, which we've seen right there. But still, despite the news, despite the trade balance news, which was almost 1 billion lower than expected, we are seeing that the EuroCAD is failing to resume its move into the triangle. Okay, so like I say, if once the news does settle a little bit, I see that the move to the downside resumes despite the news, okay, and we make lower lows. I will not doubt to enter my my short entry in there. In the other side, in the other hand, if I see that price dives back into the triangle and meanders a little bit up here, I will stop for that. I will not consider this as a valid breakout. Okay, I will consider it as a fake out, and I will reassess the whether I want to enter on this breakout or not. Probably not. For the time being, it's looking good. We've had the breakout. We've seen the pullback. Okay, you see, breakout, next bar is a pullback, and if we now continue to the downside, right there, I will trigger my short entry, and I will of course update everything that's happening on this chart, on this particular setup to you guys. All right, bye bye. Hi guys, well, this is the final update on this possible setup. If you remember, I was following possible triangle breakout to the downside in the direction of the main market sentiment, but it seems like it's well, it's kind of fizzled, to be honest. In all fairness, this turned out to be a fake out and not an actual breakout. I was expecting let me draw that properly. I will zoom in for a clear view. There we are. I was actually expecting a breakout, a pullback, and a continuation to the downside. Instead of that, what we've gotten is a breakout, but then a massive pullback above the mid band, okay, above all the way up to the upper half of the triangle, and therefore back into consolidation mode. So this breakout is effectively invalid. I will not follow it anymore. I will have to wait for another setup, another breakout, or another signal altogether, because this, like I say, this breakout has fizzled. You see, guys, this is the importance of playing it safe, to trade breakouts in the conservative way. Had I just placed a bracket order, a sell stop order right there, I would have gotten filled in, and the fake out would have killed me. I would have lost by, I don't know, some good pips in there. Okay, so my advice is to always wait for the three aspects. Remember, breakout, pullback, and continuation. Okay. Well, that's all. I'm closing this. My trading session has already ended. I just wanted to update on this setup. Bye bye.
Hi, good morning. This is Hector. It's 9:30 London time, and today is the 23rd of May 2007. I was following today the euro against the American dollar. Actually, for the first time in a long time. It's been months I haven't taken a trade on the euro, but today I was liking the formation, a continuation pattern on the hourly chart. Okay. Searching for a continuation of the current downtrend we are seeing in the shorter time frames during the last couple of weeks. As you can see, this is the hourly chart. Okay, and I want to show you what I was following today. Basically, if we have a look at the chart, we see a nice thrust down, a period of consolidation, another thrust down, a period of consolidation, and this is the live chart, by the way. Yesterday we saw a period of consolidation forming a triangle, and I was looking for another thrust down to the downside, which is what actually has happened. Unfortunately, it hasn't given me any. Been following this in throughout the morning, ever since the London market opened up about an hour and a half ago. And but it hasn't given me the chance to write it down, because well, it basically hasn't given me any entry opportunity on the shorter time frame on this triangle breakout. Okay. Anyway, I repeat, we were coming from this is today's price action, this is yesterday's price action. Okay, this is previous day's price action. All right. So we were coming from a nice thrust down. Okay, we enter a period of sideways consolidation. Yesterday, if we this is yesterday price action, if we probably follow, we have a look at the daily bar. This is the open, this is the close, the high, the low. We link that up, and what do we have? We have a spinning top. Okay, that's the what yesterday's price action looks like in would look like in the daily chart. Okay, so we have in the daily chart a nice open and close. So we have a nice red bar on the daily chart, spinning top. Okay, meaning indecision, guys. All right, we're forming a double bottom. All right, double bottom. You see that? Gotta read price action, guys. Double bottom, almost at the same level, the 134.35 area. Okay, nice red bar, spinning top, meaning indecision, moving averages pointing down, parallel to each other, more or less parallel to each other, a little bit of a snake around there, but more or less parallel to each other. Downtrend, very clear, downtrend lines to be drawn. Okay, very easily we can see that. So I was basically looking for a continuation of this pattern. Okay, red bar, spinning top, triangle, expecting if it breaks to the upside, the whole setup is void, cancelled. If it breaks to the downside, I would search for a short entry. Well, we did get the short and the breakout to the downside. I zoomed into the 15-minute chart again, and this is what's been going on in the 15-minute chart. It's giving me no entry opportunity whatsoever according to my system, okay? It's basically just plummet down like a rock for 40 pips within 1 hour, okay, within the first hour of London. Price basically shot down, okay, no chance to write this down, okay, as the breakout took place around there, because as you know, I always search for a confirmation of the breakout, okay, also below the 134.50 area, breakout, retrace and continuation. We got no retrace whatsoever, no green bar whatsoever there. Now the move is gone, guys. The move is absolutely gone, and well, it's if this triangle has given out its full potential. How do I measure potentials? Distance on the widest range area of the triangle, add it to the breakout point, there you are. It's giving out its full potential. There is no trade anymore. It's basically gone, the move, okay? So shame. I was like I say, I was following this chart this morning. It looked very nice, okay, but unfortunately, well, the breakout has happened in way too much momentum. I couldn't get any pull. I didn't get any pullback whatsoever to base my entry on, and well, that's it. Nothing else I can do about it. I'm following right now the sterling pound. Actually, it kind of looks nice to the short side. I will see if I get a signal to base my short entry on. Okay. Alright guys, bye bye. That was all for this video. Bye.
Hi guys, this is Hector. I'm looking into a possible trade today early morning in the 4th of May in the Australian dollars against the Canadian dollar. It's a trade that is a formation that I trade very often, because it's basically it's a trade that has been working out very nicely for me in the past, and I'm gonna take this trade in demo, because the spread in my live broker for this currency pair, the Australian dollar against the Canadian dollar, is way too large. Okay, I usually limit myself to trades with 7 pip spread cost or lower. This one is larger than that, so I will take it on demo, just for the sake of it. This setup looks way too nicely to let it go, but I'm not gonna trade it live, right? Anyway, it's basically a triangle formation, okay, as you can see, in the direction of the main trend as set by the moving averages. There is a triple bottom at the round number 09100, okay, and I'm looking for a breakout to the downside. I will zoom into the 15-minute chart. If the breakout occurs to the upside, I will let this thing go. Just want to see how it actually goes. Okay, whether this setup works, this price formation works once again for me or not. But like I say, it's a demo trade. All right. So basically, I'm looking, like in any other type of breakout in the direction of the trend. I am looking for a breakout to the downside, then a retrace in the shorter time frame, and a continuation of the move. All right. Well, let's see how it goes. If we get the breakout, I will update the video and let you guys know. All right. Okay. Bye bye. Hi guys, just a quick update that well, the breakout has actually occurred to the downside. Okay, we've got a 1 bar pullback below this double bottom formation, and up below the 9100. Alright, I would have just triggered my entry if this was a live trade, and the stop loss would have been placed right there. Okay, let's see how these things goes, just for the sake of it, just for the fun. Alright, the distance as usual is the measuring the widest range of the triangle and add it to the breakout point. It's about 0.9060. Okay, it should be somewhere around there. That would be the target. Okay, so this trade would be more or less be a 25 pip 30 pip actually 30 pip trade. Okay, without the spread cost. Okay, like I said, it's just for the fun of it. I'm not taking any live trade on this setup. It's just for the sake of it. I want to follow it, whether this setup actually follows through once again or not. Okay, alright, let's see. Bye bye. Hi guys, just a final update. It's been about an hour and a half since the last update. So you can see the target was definitely met. It was somewhere around here. Okay, and it was each shot about 10 pips lower than that. Once again, this type of setup has followed through. Okay, it's a beautiful setup, a setup that I like trading myself very often. Okay, basically seen in the 1 hour chart, the trend was clearly down, as pointed by the moving averages. Then we have a triangle that gives way in the direction of the trend. We have a breakout, a pullback, and a continuation aspect of it. Okay, as you can see in the breakout chapter of my trading course, it's explained there. Basically, whenever you break any level, the way I tried it is waiting for the aspect number 1, which is the breakout. Then you wait for the pullback, and finally the continuation. Okay, that would be the aspect number 1. Pullback will be aspect number 2, and the continuation will be the aspect number 3. As you make new lows, that's the entry to the signal to enter the short. Stop loss is here. Well, target price was around there. Just like I say, it was just for the fun of it, for the sake of it. I didn't profit in my live account from this trade. It was just, just to follow it through and see if this kind of setups, a flat bottom triangle in the direction of the trend, delivers once again. And as you can see, it has finally indeed delivered. Okay, once again, we've seen the breakout, the pullback, and the continuation, and well, the target was nicely met. Alright, that was all. Just like I say, it was just for the sake of it, for the fun. Okay.
Hi everyone, this is Hector again. Welcome to a new video of my Forex trading course. In this video I'm going to be talking about ranges and range breakouts, okay? Those breakouts that perhaps, probably, or hopefully we can profit from and well, make some pips of it. Okay, first of all, let's begin explaining what a range is. If you've watched the previous video regarding triangles, this is gonna be pretty straightforward, because well, most of the trading principles that we saw on the triangle breakout video will apply on this one. Okay, it's basically the same nature as far as the pattern goes. It's basically a congestion area, all right? Basically, when you have an uptrend, sometimes the bulls and the bears need to need to settle down, need to take a breather in order to well, gather up momentum enough for a new thrust in the direction of the main trend. As you can see, it's basically the same principle as the same theory as we saw on the triangles. It's just that the range, as opposed to the triangle, which was basically two trend lines, opposite trend lines, meant to clash onto each other at the vortex. The ranges are basically two sideways horizontal lines, entrapping price. As price bounces within that those two horizontal lines, perhaps making a double or a triple top of the of the range top, or and a double triple bottom of the range bottom. In this case we have a double bottom, okay, right there, and a double top. Okay, it's a small range, as you can see. It's not very large. It's barely made up by, let's say, 15-20 bars. Yeah, 20 bars at most. It's small range. Later on I will show you another chart with very large range, larger than usual, but this one, in this case, this is the type of range most of the times you find. Okay, it's a range made, like I say, out of 20 bars, something like that, and it's very easy to spot within the trend, because like I say, there are two or more bottoms, okay, effectively forming the range bottom, and then two or more tops effectively forming the range top. Okay, basically, as we explained on the triangle chapter. On the triangles chapter, basically what I said, once I spot a range, this range bound price action, what I do, I usually place my sound alarm a few pips above the range top. In this case, since we are in an uptrend, remember that I only take breakout in the direction of the main trend, so should this breakout happen to the downside, I would cancel the whole thing. Okay, I will not be looking for any more trading opportunities in this setup. Okay, only if it breaks to the upside, I would be interested to search for long entries, and long entries only. Alright, so like I say, what I usually do is to place a sound alarm few pips above the triangle top. As soon as it gives way, I am, the alarm goes off, and I focus my attention on the chart. Please remember that, as opposed to the triangle, where you had let's say a reference as far as time goes, which is the vortex, you know that the triangle is supposed to break before reaching the vortex. Alright, well, ranges are, since ranges are basically made up by two horizontal lines, there is no vortex, so this range can effectively go on for, God knows how long. You don't know. That's why you want to use some sound alarms in order to be, in order to know when the breakout actually takes place. As I was saying, you don't have that time reference, meaning the vortex, so this range could go on and on for many days, and you can't possibly follow a chart for that long time. So it's always good to be alarmed whenever the breakout happens. Okay, as usual, in small ranges like this, the signal comes in the shorter time frames, what I usually call the trigger charts, which, as you know, is usually a 4 times smaller time frame than the setup chart. Okay, the setup chart in this case is the 1 hour time frame. The setup chart is the setup where we spot the actual trend and also the range in itself. So in order to search for an entry, I would zoom into the 15-minute chart. Okay, since the 15-minute chart is basically 4 times smaller or shorter than the hourly chart. Okay, all right, now zooming into the 15-minute chart, let me scroll back to spot the range. There we have it. As usual, as I explained on the triangles video, I look for my typical breakout pullback continuation pattern. Okay. Usually in small ranges, as I was saying, you see the breakout pullback continuation in the short time frames. In longer charts, in longer ranges, sorry, the breakout pullback continuation pattern takes a little bit longer to unfold, and therefore to represent itself on the charts. So you might be able to spot it on the setup chart in itself. You don't need to zoom into the trigger chart. But in this case, since it's a small range, you usually need to zoom in a little bit in order to spot the actual signal, okay, the actual entry signal. But no worries, I will be showing you more charts and you will be able to identify or to visualize what I'm talking about, okay? In this case, I was saying we have a very, very small range, and therefore it's always useful to zoom into the shorter time frames, into the trigger chart. And well, basically this is the case, okay? First of all, we can see that we have the breakout bar. All right, you see this is the level we were keeping an eye on. Our sun alarm was placed few pips above. The breakout thrust takes place, our sun alarm goes off, we focus our attention on this chart in order to spot for an entry. As usual, we don't enter it. If you are conservative, if you want to be aggressive with your entries, by any means go ahead and enter the market just as the breakout takes place, perhaps let's say 5-10 pips above the range top, let's say somewhere around there. That's not the way I personally do things, okay? I like to wait for confirmations. The confirmations comes in the shape of a red bar, okay? That signifies or represents the pullback aspect of the breakout pullback continuation pattern. It's a red bar in this case, since, well, obviously we are in an uptrend, and the pullback can only be signified by a red bar. You want to see a red bar, okay? 1, 2, 3 bars. You do want to see you know, an actual red bar signifying the pullback. Sometimes, you know, the breakout takes place, and the breakout pullback continuation might happen on even shorter time frames. I don't like to zoom in too much, okay? I don't like to go to zoom in farther than, like I was saying, 4 times shorter the time frame of the setup chart. As I was saying, in this example, the setup chart is the hourly chart. Therefore, I would not like to zoom any farther than the 15-minute chart in order to see that breakout pullback continuation. If the breakout pullback continuation shows in the 15-minute chart, great, I'm good to go to search for an entry. If it doesn't, if I need to zoom into the 5-minute chart or even less than that, I'm just not comfortable. I'm just not comfortable with that. To be honest, whatever happens on let's assume our setup chart is the daily chart. All right, just for the sake of discussion here, let's assume we are spotting a setup on the daily chart, and then we want to zoom in a little bit in order to search for our entry. If we need to search if we need to zoom into the 1 hour time frame, the 30 minutes chart, the 15-minute chart, that's too much in my opinion. Honestly, whatever happens on the 15-minute chart or the 30-minute chart is not quite relevant to the daily chart, okay? It's just zooming too much. We would be you know, probably fooled or confused by a random market noise. And quite frankly, the 15-minute chart or the 30-minute chart, it's simply random market noise as far as the daily chart goes. So if I am spotting a setup on the daily chart, I would not zoom in any farther than the 4 hour time frame in order to search for my entry. Anyway, in this case, like I say, I like to see the breakout pullback continuation pattern on my trigger chart, which is the 15-minute chart in this case. 15-minute chart in this case. We can clearly see that here with the breakout pullback signified by that red bar, and then the continuation pattern. As we take out the breakout thrust, okay, this thrust I'm talking about, as we take out that a couple of pips above, 1-2 pips above, we are good to go to enter long in the market, okay? And well, as you can see, it would have run into profits straight away. All right. As far as stop losses goes, as usual, whenever I'm trading a breakout pullback continuation type of entry, I like to place my my stop loss order below the low of the pullback aspect. Okay, so if we have the breakout pullback continuation, this would be my long entry, and right below 2, 3, 4 pips below the pullback aspect, that would be my stop loss. I know some people argue on that well, since you're basically trading a range, okay, you would want to place your stop loss below the few pips below the range bottom, or some people even draw a mid band in the range, okay, and place the stop loss below the mid band, the lower end of the range. Quite frankly, in my opinion, I disagree with that. I like to keep my stop losses as tight as possible whenever it's possible. Sometimes you just cannot keep a tight stop loss, but whenever it's possible, I don't see the need in stretching out my stop losses more than it's actually necessary. In my opinion, I am not here, in this case, I am not trading the range. Alright, if I was trading the range, it would make sense that my stop loss would be placed below the range bottom. But in my opinion, I am not quite trading the range, but actually the breakout of the range. Alright, so if I am trading the breakout of the range, I want to base my stop loss, like I say, based on that breakout in itself, meaning the breakout pullback continuation pattern. The lowest part of the breakout pullback continuation pattern is, of course, the pullback aspect, and therefore my stop loss should be placed a few pips below that. If upon entry, right there, price decides to turn around and go back into the range, in my opinion, that breakout has fizzled. Okay, yes, I understand that we are trading in the direction of the main trend, and chances are that sooner or later price will begin moving up again. All right, but in my opinion, there is no point in eating up a large drawdown if it's not necessary. So like I say, if upon entry price decides to retrace back into the range area, I'd rather exit out at a small loss. Okay, remember my stop loss was placed down there. I would take this loss, which is, you know, it's quite a reasonable loss. It's quite small considering I am aiming for a long swing to the upside. So I'd rather take this small loss, let price reassess itself. Okay, let price readjust, let the dust settle a little bit, and whenever it decides to break out again, then I would search for another entry. If the first breakout, like I say, fizzled out, I just don't see the point in being being in that trade anymore. In my opinion, as I was saying before, I'm not trading the range in itself. I'm trading the breakout of the range. If the breakout in itself fizzles out, you know, take up the loss. Okay, eat it up. You know. Tip your hat to the market, acknowledge the loss, and let price reassess itself. Okay, at the end of the day, if we go back into the 1 hour time frame, you can see that we are clearly trading in, actually let me scroll, trading in the direction of the main trend. So chances are that sooner or later we might get another breakout farther on in time. All right, until this range bottom gives way, the trend is still intact. Okay, perhaps the first breakout fizzled out, and perhaps price decides to get back into the consolidation area, but until this level gives way, at least from a technical point of view, the trend is still valid. Okay, until this happens and price continues being above this level, we might easily get another breakout to the upside, and therefore another chance to ride a long entry. Okay, it's like I said, it's just a matter of preference. I am not saying it's the only way to place the stop losses. It's not. I'm not saying it's the only way to trade the range breakout. But at the end of the day, this is the way I personally do things. Okay, and therefore it's the way I advise you guys to do it. as a general rule of the thumb, I like to keep my stop losses as tight as possible. If the event that got me in the trade, meaning the breakout pullback continuation, has been violated, I just see no reason to sit through this trade. If price goes back down here, this was your entry level. Right now, price, let's assume current market price is around here. Right now, the loss, the drawdown is not that small anymore, and once, like I say, price has gone back into the consolidation area, there is no reason to be long anymore, because, well, you are still consolidating sideways, and in my opinion, you don't want to be positioned in sideways moving markets. You only want to be positioned once the market is showing you momentum to the upside. In this case, upside, since we are in an uptrend, of course. If that momentum to the upside, just poofs out, well, it's time to get out. Like I was saying, tip your hat to the market and take the loss and wait for another chance to make a profit. But anyway, if everything works the way it's supposed to, this would be entry level, this would be your stop loss. This would be the long entry stop loss. Also, another general rule of the thumb: price usually dries out of momentum once the range width has been run. If the range is, let's say, 50 pip wide, up on the breakout level, you add up another 50 pip around this area, the market should run out of steam. That's what the theory says. If you are in a very nicely trending market, this definitely could potentially keep on moving forth for much more than those 50 pips. All I'm saying is that perhaps it might be a good idea to move your stop to break even at this level. Once the range has moved. Once the range has moved its full potential width, meaning the full potential target, it would be a good idea perhaps to move your stop loss to break even around here, or perhaps take half of your position out at that level, because sometimes it is to be expected to see a pullback, or at least a minor pullback from that level. All the people that have been waiting for this breakout to take place, once it does, they run in momentum up to that level, up to those 50 pips, and from that, some of the people, the conservative people, conservative traders, will be perhaps closing down their positions, and therefore price could see a retracement. Like I say, if you are in a very strong trend, let's go back into the 1 hour time frame. As you can see, this is, well, it's been a beautiful uptrend all the time up to the range. Once the range gives way, it definitely moves in momentum for quite more than the range width, because, like I said, we were in a high momentum trend. But nonetheless, like I say, always suspect a little bit of a pullback once you the overall width of the range has been run in the direction of the breakout. Just a tip that you might want to keep in mind: to move your stop to break even at that level, perhaps take half of your position out at that level, letting the second half run, hoping for a larger move, but nonetheless always keep in mind that level. At least from make a mental note that you might see a pullback, a retracement, or a dry out in momentum once you run the width of the range. All right. Before, I was telling you that this is This is a rather small range. Now I'm going to show you another chart where we can see a much larger range. I'm showing you right now the USD against the JPY, the Japanese yen chart. As you can see, this is a much larger range. Okay, this one, if before we were saying that a small range perhaps should should be made out of, I don't know, let's say 20, 25 bars, perhaps, yeah, 15, 20, 25 bars. A large range will probably be made out of 50, 40, 50, 60 bars even. Okay, that's a pretty large range. As you can see, the move came from above, but then we've seen a long period of sideways price action. Okay, price entrapping. The range entrapping price within, effectively forming a double bottom and a triple top there. Okay, for a long time, perhaps easily 50, 60 bars from all the way from the beginning of the range until the end. It is clearly a long, a very large long range. Okay, in these cases, when you see a large range, there is no need to zoom in for the breakout pullback continuation. You can usually see it in the setup chart in itself. Okay, this is the 4 hours time frame. In these cases, when you see such a large range, such a long area of consolidation, the breakout pullback continuation entry takes a little bit longer to unfold, because at the end of the day it's been a long range, so it just makes sense that the entry of that breakout will also take a little bit longer time to unfold. Okay, in that case, you usually, like I said, don't need to zoom into the 1 hour time frame, and indeed in this case we can clearly see the breakout pullback continuation signified, represented in the 4 hours time in itself. Okay, no need to zoom into the 1 hour time frame. It's don't you worry, guys, too much about counting how many bars the range got. Okay, whether this is a 60, 50 bar range or a 20 bar range, don't you worry about that. As soon as you train your eyes a little bit, as soon as you do your homework, scrolling back in time in your own charts, trying to spot ranges, etc., etc., you will train your eyes, and you will very quickly identify whether you are talking about a long range, a long-term range, or a short-term range. All right. Like I say, don't you worry too much. It's just a matter of getting accustomed to the charts, of getting accustomed to chart reading, and that only comes with experience. I can only tell you the basics of it, but then of course you guys need to put a little bit of screen time in order to, like I say, to train your eyes. All right, but like I was saying, as a general rule, okay, longer ranges, as in this case, you don't need to zoom into the short time frames in order to spot for the breakout pullback continuation. In shorter ranges, you definitely want to zoom in a little bit. Okay, just a general rule of the thumb, like I say. Also, another thing that I wanted to comment is that don't be too strict about the actual level of the actual bands of the ranges. Okay, as I always say, markets are not perfect. Sometimes here, as you can see, this swing fell shy few pips off the range top. Here it overshot a little bit, 5-10 pips perhaps. It overshot a little bit here as well, and then we had the breakout pullback. The pullback overshot a little bit as well, another 5-10 pips. Don't be too strict about it. Okay, it's impossible to expect levels of support and resistance to hold price right to the pip. Okay, it's just impossible. So if you see price here overshooting a little bit, or here perhaps falling shy a few pips, or here once again overshooting the former support levels, now working as resistance. If you see a wick of the a candle wick here, you know, don't be surprised. It's normal, all right? That doesn't mean that the breakout is it's about to fail, or that it's a weak breakout. No worries about that. Markets are not perfect. Like I said, it's impossible to expect levels of support and resistance to hold price right to the peak, all right? Also, another important thing to always remember is that the longer the range is, okay, in this case, as I was mentioning before, this is a long, a quite large range. The larger the range is, the more momentum or the more violent the subsequent move up on the breakout will be, okay? Well, this is, this is something that you begin to perceive as you gain experience in trading, and this is something that I have noticed, like I say, throughout the years. If you go through a very long period of, it's like if the market was dormant, like if it was sleeping or waiting for the breakout to take place. Once the breakout takes place, it's like if, like if many traders, like if many market participants become aware of the fact that this long range has broken, and the excitement of this event in itself spurs the traders to, or propel the traders to enter short in this market. At the end of the day, all the people that have been keeping an eye on the Japanese yen, they've been seeing this range for a long time. Okay, they've been waiting, price swinging up and down, very boring price action, until eventually, whoa, we get a breakout. Okay, you gotta understand that trading the markets, it's nothing but a bunch of people coming together in order to exchange positions. Okay, so like in any other activity that involves human beings, obviously psychological reasons are usually behind trading decisions. Okay, in this case, the fact that we've just broken a long period of consolidation. Once the breakout takes place, it's well, many people will see green lights. Okay, they will many sound alarms have been ringing off at this level as price was breaking through the channel bottom. Okay, and then many people, just as yourself, okay, will be waiting for the right time to enter short in this market. Okay, it's been a long period of basically no trading action for most of the traders. Once the breakout takes place, they all get ready to jump on board. Okay, and as they do, well, have a look at what happened. An enormous drop here, a very, very large drop, and very fast. Okay, this is something that I've been noticing throughout the years. Like I say, if you spot a large range, keep an eye on that range, especially, well, not on the range in itself, but on the breakout, because once the breakout takes place, market is bound to react very very violently of that event. Okay. Now I want to show you another interesting chart, where you will see that sometimes you might miss the first chance of entering the market. Okay, meaning the initial breakout pullback continuation pattern, but that doesn't mean that the boat has taken off without you. You may have a second chance later on in time. Okay, I'm going to show you a chart on the GBP against the Canadian dollar. And well, we can clearly see I've marked this sideways range in blue in my screen. Okay, we have a double, as usual, a double top. Sorry, in this case we have a triple bottom right there. Effectively building the range, and this is the breakout that I was or I would be looking to trade. Okay, in that case, if I zoom into my trigger chart, since this is the hourly chart, I would zoom into the 15 minutes time frame in order to search for an entry. Let me scroll forward a little bit. Okay, there we are. This is a breakout, as you can see, and it's run, well, it's run about 100 pips. Okay, straight through, no breakout, pullback, continuation whatsoever. Okay, continuation whatsoever. Okay, have a look. We have a nice move straight through. Okay, if we were waiting for a breakout to pullback continuation pattern here, well, we definitely didn't get it. Price basically, like I say, moved 90 pips to be exact in one direction straight through without giving us any possible entry. Okay, when that happens, please don't just ditch the chart as a whole. Just keep it open, because you might have a second chance. Okay, sometimes, you know, quite often actually. Remember, what I was saying before. Usually, when price reaches the total width when price has run the total width of the range, okay, usually we see a momentum die out. Okay, some positions are being cashed in. All the people that entered upon the first breakout have run this range breakout for the total width of the range. Okay, and then sometimes we do get a second chance, okay, meaning a pullback back to retest the breakout levels. Okay, in this case, the range bottom. All right. This is important, guys, because it means that you will effectively have a second chance on a trade that you initially missed it. Okay, you didn't have a go at the first move, okay, at the first breakout, but that does not mean you cannot trade the pullback if the pullback indeed happens. Okay, sometimes it does. Like I say, many people close out their positions once the total width of the range has run. Okay, positions are being closed. Price therefore retraces back to breakout levels. Many traders, just as yourself, people who missed out on the first move, see a second chance to rejoin short in this downtrend. Okay, and therefore they enter short there, and well, they have a second chance indeed. You see. So, as I'm saying, please don't just close a chart, sorry, if you miss the initial breakout, because you may indeed have a second chance upon the pullback. Sometimes the pullback don't happen. Okay, as I was showing you before in the previous chart, once the breakout took place, the breakout pullback continuation took place. Wow, it just moved right through, and you never have a second chance. But sometimes it does happen. Okay, so like I say, if you miss the first move, you know, it's worth to keep an eye on this chart for a little bit longer, because few bars later, like I say, you may have a second chance. Like I was saying, price retraces back. More people and more traders, just as yourself, see a second chance to profit from this downtrend, and they enter short, and therefore push price, you know, for a whole new move, okay, to the downside, in the direction, as usual, of the main trend. Okay, in that case, what I personally do, if I miss the first trade, okay, if I miss the first impulse, let's say, the first swing, I like to place a sound alarm a few pips, perhaps 10 pips below the former channel bottom. So if price is to eventually retrace back, I will be warned. Okay, my alarm sound will ring off, and I will know that there is a second chance if. Of course, if price retraces back into the consolidation area, or simply shoots rockets up straight through, well, you know, there is no trade to take. But if these former levels of support eventually upon the pullback become resistance once again, there are high probabilities that the move will continue in the direction of the original breakout. Okay, and you will indeed have a second chance to enter short in this downtrend. These opportunities of riding the second swing, if in case you miss the first one, actually are valid for both for range breakouts and also for triangles, actually, especially flat bottom or flat top triangles. Okay. At the end of the day, remember that the range is basically a triangle, whereas, well, you know, the outer boundaries of that consolidation area simply shape in a different way. But at the end of the day, the psychological reasons to for triangles or ranges to form in a downtrend are basically the same. Okay, for this reason, as I'm going to show you another chart. In this case, is the Canadian dollar against the JPY. As you can see, this is a flat bottom triangle. All right, we have a clear level working as support, and then we have a leaning trend line effectively making lower highs, building up pressure up on this level. And once it gives way, if you miss this first swing, this first impulse, don't you worry, because you may have a second chance. Okay. As usual, once price has run the largest width of the range, of the triangle in this case, once it's run to the downside, some people, conservative traders, might close down some of their positions. Price retraces back, just as we saw before in the range example, really, retraces back to the main reference levels, which is of course the range bottom, form a support, now perhaps working as resistance. If price drives through, you know, nothing to do here, you cancel, you can definitely now forget about this setup. But if price doesn't drive through, and indeed you see that this level works as support, okay, sorry, as resistance, former support, now resistance, and begins to turn around, it's a nice chance that you may see a new swing to the downside, okay, in the direction always of the main trend. So both in triangles or in ranges, if you miss the first move, keep an eye on the breakout level. Okay, in this case the triangle top, or in the previous one the range, the triangle bottom, not the triangle top, the triangle bottom, or in this, on the case of the range, the range bottom. Okay, because you may see a retrace upon running the total width of the pattern. You may see a retracement back to former support levels, then working as resistance. If they do work as resistance and you see price standing around, you may have a nice chance to, you know, enter short right there, you know, somewhere around there, and, well, you know, ride it down for a new profit. Okay. Alright guys, that's basically all for this video. I hope you know, the way I explained the way I personally trade ranges in a clear way. Most important of all of this video is to remember that there are different type of ranges. There are different type of ranges. One of them, some of them are small, okay, made by like as I was saying, about 20 bars. In those cases, you want to zoom into the shorter time frames in order to search for that pullback signified by a red bar, or red bar in this case, since we are in an uptrend. In a downtrend, of course, we would be looking for 1, 2, or 3 green bars up on the breakout. Okay. So in small ranges, it's good to zoom into the short time frames. In large ranges, usually there is no need. You can see the breakout, pullback, thrust in the setup chart in itself. Also, another concept we've talked about in this video is that the longer the range is, the longer the move up on the breakout will be, so you will be able to expect larger profits, since most of the people waiting for this breakout to happen, you know, is some sort of a market euphoria. You know, once the breakout happens, everyone's get excited, everyone gets their positions ready, and upon confirmation they enter the market, and price bang moves very quickly in one direction. And finally, the third important concept we've talked about in this video is the fact that if you miss the first move, okay, the first swing up on the breakout, if you got no breakout, pullback, continuation pattern at all, and price simply drove through, don't worry. There are chances that sometimes once the total width of the range have run, you may see a retracement back to former support levels now working as resistance, and if it does indeed work as resistance and price retraces from there, okay, begins to curl around, there are good chances to enter short in order to make some new profits. Okay. Alright guys, that's all for this video. Now I'm gonna show you in another video a live example of a range breakout. I hope you liked this video. If you have any question whatsoever about ranges or range breakouts, please don't hesitate to drop me an email. I'll very gladly answer all your questions. Okay. All right, folks. That's all. Bye bye.
Hi guys, this is Hector. Today is the 24th of May 2007. It's 9:15 London time in the morning. I've just taken a trade. It's a range breakout trade. It's basically a continuation pattern, what I understand as a continuation pattern. Okay, let's see what's been going on in the daily, in the 4 hours chart. Okay, we see we are definitely in a downtrend. Okay, moving average is pointing down. Let's go back to the 1 hour chart for a clearer view. Actually, we are definitely in a downtrend. Okay, we've just come last week through a nice period of down moves. Okay, you see the price action every day after day after day, making lower highs, okay, lower lows. After that we entered a period of consolidation. Okay, it was a 1 day, right, consolidation. Have a look at this very tight narrow range. You see that, guys? Then yesterday we saw price this, if you look at it in the daily chart, okay, it's basically an outside bar. Okay, a bearish outside bar. An outside bar is basically you have one bar, all right, which in this case is a spinning top. Have a look at this. This is the open of the day, the close, the high, the low. You link that up, and then you got a spinning top, basically after a nice move down. Okay, so you have a nice red bar, okay, in the daily, a spinning top, all right, doji spinning top, whatever. Then you have a bearish outside bar. Okay, this is the open, this is the close, the high, and the low. All right, this is another red bar that actually engulfs from the outside, okay, the previous day's price action. You see how the high and the low are, the high is higher than the previous day high, and the low is lower than the previous day's low. All right, so basically engulfs the whole the day before yesterday's price action. Okay, so basically we have one red bar, okay, engulfing the previous day. All right, and now we've just made a new low. Okay, we've just broken below the day, yesterday's low. All right, we've just broken. We opened right there, okay, and we've just tipped below. Okay, we open and we pipped below, making new lows for the day, new lows for the downtrend, and therefore it's basically, my understanding is that the down move will continue pushing down in the direction of the moving averages. Okay, let's clean up the chart a little bit once again. This is pure price action reading. Okay, nice red bar right here. We have a doji, spinning top, whatever, indecision, or at least market is taking a breather after such a nice move down. Here, spinning top. Then we have an outside bearish flag. Okay, right here. Open and the low. Okay, open, close, low. Actually, the close and the low is very similar. And the high, that's another red bar. And we open right here, right there, you see, and we've just made a lower low. Okay, we've just broken the low. We open here and we've made a new low. In my opinion, nice move down, consolidation, taking a breath. Market is gathering up energy with an outside bar. Okay, and bam. As we make new lows, that's in my opinion, and my understanding is that price is continuing the down move. Okay, so I've just triggered my short entry. Stop loss is as you can see, this is my sell stop order has just been triggered. Stop is up there, and my price target, it's at 145.00 round number, right there, for about 50 pips in target. Okay, open, that's the entry of the short, the stop loss, and the final target. Okay. Also, I like how we've gone through. You see this range that we formed during the last few days, the last 2-3 days. Okay, forming a triple bottom. 1, 2, 3. You see that? Yesterday night we broke below. Overnight we retraced and kind of consolidated. Right off the former bottom, okay, of this channel. Okay, you see that, but we couldn't break above. Okay, if you see all the overnight range, trading range, have been actually quite tight, and after the breakout we retraced back and we consolidated around this area, but we couldn't break to the upside. Okay, we couldn't break this former area of support, triple bottom, now working as resistance. And finally this morning, as London opened, we just made a new low. Okay, and therefore I triggered my short entry. So it's basically this trade blends both pure price action reading, as I was explaining before, following the daily bars. Okay, and what they actually mean, or my understanding of what they actually mean. I might be perfectly wrong, but you never know. And also it blends a perfect range breakout strategy. Okay, ranging, breakout, retrace, continuation of the move. So you made new lows, you enter short. Here's your stop loss, and well, my target price is down there. All right. Okay, guys, I will pause the video now, and I'll keep on updating whatever happens from now on. Okay. Bye bye. Hi guys, just a quick update to let you know that I'm moving my stop down to here. All right. This is the breakout that I was. Where it is? There it is. This is the breakout that I was trading this morning. All right. breakout. This was the overnight range. Finally we broke below the yesterday's low, and I triggered my entry. Well, we had a pull down, a breakout of yesterday's low right there, breakout, pullback, and continuation, making new lows for the day. So I'm moving my stop right up here. Okay, it's all about in-trade management, as I explained in my website. And well, basically we've just broken a level of former support. It's become resistance right there, as you can see, and now we've made a new low. So I think it's rather safe to move stop right there. Okay, all right, bye bye. Hi guys, this is Hector. Just one final update to let you know that I've just closed my trade on my live account for plus 41 pip. Was basically recapping a little bit. Triangle breakout, a range breakout in the direction of the main trend with a breakout, a pullback right here overnight, not being able to take out this previous area that had been working before as support. Then later on it worked as resistance. We couldn't take out that area to the upside. Instead we made new lows right there to the downside, and about 6 hours and a half more or less, it's just pipped my final target for plus 41 pips. Alright guys, bye bye, that's all.
Hi guys, this is Hector. Welcome to a new video of my Forex training course. I hope you're enjoying the course so far. In this video I'm going to be talking about flag formations and of course the breakout of those flag formations in order to score a profit whenever possible. I'm going to make this video definitely not as long as the previous ones, the ones going on the range, on the ranges and triangles topic, because most of the trading principles apply. Okay, at the end of the day, a congestion area is just a congestion area, no matter whether they take the shape of a triangle, range, or a flag. Okay, so most of the trading principles we've reviewed in previous videos do apply to flag formations. So what I'm going to be doing here is simply, I'm just simply going to lay out the what a flag is, what type of patterns or what type of price conditions we want to be searching for, and then you will be able to apply the same principles, like I say, the same trading principles you've reviewed on the previous videos. Okay, alright, I'm gonna be showing you both a bearish and a bullish flag formation. Both of them are equally tradable. The only difference is, well, whether they take place on an uptrend or in a downtrend. Okay, I'm gonna be begin with a bearish flag formation. In this case, I'm showing you a clear downtrend on the CAD against the JPY on the 4-hour time frame. A bearish formation, basically it's a flag upside down. Okay, this is the flag I am talking about, right there. Actually, let me mark it with proper trend lines. Here we have the flag in itself. It's basically a retracement channel. 1 second, I'm gonna try to adjust the trend lines as much as possible. Okay, right there. Here is the upper part of the retracement trend line or the flag, of the retracement channel, and here we have the pole of the flag, which I'm gonna mark in, let's say in green, for example. Okay, so basically a flag formation in a downtrending chart such as this one, it's basically one whole swing. Okay, the pole being the swing in the direction of the main trend, and then the flag in itself being the retracement channel back to resistance levels. Okay, when trading a flag formation, it's important to understand that we are basically swing trading, okay? Basically, we are looking to exploit a whole new swing in the direction of the main trend. That's why all the swing trading principles that I usually look for, such as a confluence of, well, first of all, of course, as usual, a proper moving average formation, okay? All of them in order, all of them parallel to each other, all of them pointing the same direction, the 100 moving average not being breached, the dynamic area of support and resistance being respected, etc., etc. Okay, you've reviewed all that in the first chapter of this course. And also, what we will be looking for is for a retracement back into that dynamic area of resistance. In this case, we overshot about 3 bars, I think, 1, 2, and then the third bar we came back down. You know, it's not a big deal. You know, you can have a quick pierce above as long as you don't get many bar closes above, and as long as price doesn't get anywhere near the 100, it's fine. Like I say, as long as price dives back down into the right area of the dynamic area of resistance. Since we are in a downtrend in this case, we want price to fall below the dynamic area of resistance, okay? So, like I'm saying, all the trading principles that we always look for to find in trending scenarios apply when we're basically about to trade a flag breakout. Okay, first of all, we must have a retracement back to the dynamic area of resistance in a trending scenario, and that will be signified by a retracement channel. In this case, is marked in blue. All right, right there, it's marked in blue. It is clearly a retracement channel. Price bounces down, up and down towards that area of resistance within this channel, and eventually, once meeting up with this area of resistance, well, the bears come in place once again, and the downtrend, the overall down market sentiment, does the rest of the job for you, pushing price in a new direction. Okay. And moreover, other than the retracement, what we need to see is a confluence of different elements of resistance coming around that area. At the end of the day, holding price below. Okay. You know, basically working as many different elements of resistance clustering up together and holding this possible retracement before we see the breakout to the downside. In this case, what we see is, first of all, we have a Fibonacci retracement level, the 61% Fibonacci level, right to the pip, right there. Okay. Also, of course, the dynamic area of resistance, even though, like I say, it was pierced by 3 bars, not a big deal. And also, if I zoom out a little bit on this chart, we can clearly see that there is a trend line coming down at that level right there. Okay, right there, this trend line linking the top parts, the top swing, top peak of this trend, then the next swing, and well, it comes, the price gets rejected off that level once again there. So basically, we have different elements coming together at that level. Like I say, let me zoom back in a little bit. Right there, take off the trend line, take off the Fibonacci. Okay, so we've determined that we have a pullback to the dynamic area of resistance, and moreover we have different elements of confluence. Okay, confluence of resistance above this, right above this level. If price breaches through, as usual, the whole thing will be cancelled. However, if this level manages to hold price below, and from that the retracement channel gets broken in the direction of the main trend, we have green lights to search for a short entry. Okay, like any other type of breakout. Excuse me. Like any other type of breakout, the entry in itself will be given by the breakout, pullback, continuation pattern. This been my entry, this been my stop loss, and well, as you can see, price nicely riding for a new swing to the downside. Okay, once again, breakout in momentum. You see this breakout long red bar down there, okay, breaking below the retracement channel bottom. We have the breakout, then we have a pullback, retesting breakout levels. Okay, this is the breakout level. We have a breakout, pullback, retesting breakout levels, and from there we make new lows, triggering our short entry, stop loss as usual right above the pullback aspect, few pips above, 3-4 pips above, and from there, well, this is our entry, and from there we ride a new swing down. What about targets? Well, the targets are measured as per the pole of the flag formation. Okay, basically we measure the previous swing total distance, and we add it to the tip of the retracement. Okay, right where the new swing began, and it takes us all the way down here. Actually, let me draw that. Let me get the ball of this flag and project it onto the new swing, and there you have it. This level would be our target right there. It's where it's met. Okay, you see that? We simply take the pole of the flag, we prolong it in time, and well, that level will mark our final target. Okay, very typical flag formation. Like I say, very typical setup. It worked nicely. We had the a confluence of resistance right above that. Upon bouncing off that confluence, price broke down to the downside the retracement channel. From there we got the breakout, pullback, continuation, entry pattern. We triggered our short entry. We measured our the full potential target of this flag formation. It took us all the way down to this level, and well, right away upon entry, bang, price met our target few bars later, about 1, 2, 3, 4, 5, 6, 7 bars later. So all in all, like I say, a very nice flag trade, a flag breakout trade. And that's basically it, really, guys. There is not much to say. Just simply remember that when you are trading a flag formation, you are trading a swinging formation. Okay, you've just gone through the previous swing, and now you are aiming to exploit the next one. Okay, once the retracement trend line gives way, that's your entry, and well, you try to make some profits out of it. But like I say, it's basically the same type of trading principles like any other trading consolidation area. Okay, imagine a flag formation. It's basically a range. Okay, remember on the ranges on the ranges videos before, I was showing you how we would find a new swing to the downside into the congestion area. From there we bounce up and down, okay, and eventually the main overall market sentiment muscles price in the direction of the main trend, of course, and well, once we have the breakout of the lower band of the range, we get our entry, and from there we try to squeeze some profits out of the next move. Okay, well, basically the flag formation is the same thing. It's just a leaning range. Okay, do you see this range? As you can see, it's basically the same principle, but it's leaning. All right, it's not moving sideways as in ranges as in range breakouts, but it's basically just simply leaning a little bit, okay, with a little bit of a slope. But like I say, the principles are still the same. You need the trend, okay, you need the moving averages to catch up with price. Once you get the breakout only in the direction of the main trend, if price continues moving in against the trend, you don't take that trade. Once you get the breakout in the direction of the main trend, you wait your entry in the shorter time frames in the shape of a breakout, pullback, continuation, and from there you enter short, you place your stop loss, you measure the previous swing total move, okay, and add it to the tip of the retracement channel, and from there you project your final target. Very, very typical price pattern. Now I'm going to be showing you what a bullish flag formation looks like, okay. We have one nice bullish flag here in this chart that I'm showing you right now. In this case is the Swiss franc, the USD against the Swiss franc, that being the flag in itself, this being the pole. Let me mark it in green, okay. And as you can see, basically the same type of pattern. We have a nice uptrend, alright, as per the moving averages. We have a whole new swing move into the in the direction of the main trend, okay, making new highs. From there, price needs to take a breather. It retraces, swinging back and forth within a channel, within a retracement channel to be exact. Once you get the breakouts, you are good to go to search for a breakout, pullback, continuation pattern, and from there trigger your long entry and bang, off you go. Your stop loss will be set down here, and your final target, if you get the whole pole and you add it to the retracement tip, to the tip of the retracement, sorry, it would take you right there. There is where you would exit the trade, okay, at this level. So as you can see, it's a very easy type of trades, okay, very easy type of price pattern. In my opinion, it's not as reliable as ranges breakout. I still like ranges breakouts and flat bottom or flat top triangles better than flags, simply because since it's a sideways range, okay, or like I was saying, a flat bottom triangle. Imagine price coming from above. Once it gives a breakout, basically you enter short, hoping to ride a new swing to the downside. With channels is basically the same thing, okay. Price comes from above, enters a period of consolidation, and then it breaks to the downside. Well, in my opinion, the factor of having one clear horizontal level to keep an eye on, meaning that you have a clear level to focus on as far as the breakout and the pullback goes. In my opinion, it makes the entry much easier than with a flag formation, okay, or with a regular triangle, okay. When you have a regular triangle, since you have a sloping trend line, okay, the breakout, once you have the breakout, the pullback is not usually as clean as it is on a flat bottom triangle or flat top triangle if you're in an uptrend, of course, or in a sideways range, simply for the fact that this line that you want to break out from, it's sloping, okay. It's not as clean, okay. It's not as well defined than a horizontal line, meaning the bottom of the flat bottom triangle or the range bottom as well. So as far as I am concerned, it makes it a little bit more difficult to spot the entry, okay, or at least the right time to get the entry. When you have a sideways range, you know that anything below that level, as long as this level once broken, it holds any type of retracement, okay, anything below that level screams bearish at you, or bullish at you if you were in an uptrend, okay. But like I say, you have a very clearly defined level to keep an eye on. When you have a sloping trend line, you know, it's not so easy to keep track where the retracement should go or not. That's where screen time, practice, and experience comes in. I mean, but like I say, in my personal experience, I prefer to trade ranges breakouts than flag breakouts. Anyway, nonetheless, flag breakouts, I definitely do trade them. Okay, it's just, in my opinion, just a little bit more difficult, but still I trade them just, you know, just fine, and they do work. Okay, you just need a little bit more of experience to you know, a little more of experience to profit from them. The good part about flag formations is that they happen everywhere, okay. Every time frame, every trend, you will see many flag formations. It's actually the most common of all price formations. Actually, in this very same trend, have a look here. We have a swing up, retracement channel. You see retracement channel, breakout, whole new swing to the upside. From them, another flag formation, another breakout, pullback, continuation, bang, a new swing to the upside. And then what do we have? Well, have a look by yourself. We have here another flag formation, another one. Here we have a tiny flag formation. Anyway, that tiny flag formation gives way to our main flag formation, the one we've just been reviewing on this video, etc. But nonetheless, like I say, they happen so often, all right, so often. If you master this type of price pattern, well, you will definitely become a profitable trader, especially as usual, because you are trading a breakout in the direction of the main trend, okay, and only once the breakout is being confirmed with a breakout, pullback, continuation. Like I say, flags formation, you gotta become familiar with them because they happen so often, okay, so often that, well, it's the easiest to spot out of all trading patterns, because, well, have a look. In just one trend, we had 3 following swings, 3 following flags, okay, and therefore 3 following breakouts in a row that you could have profited from. Okay, every time they give way, bang, new swing to the upside. They give way, bang, new swing to the upside. It gives way, bang, new swing to the upside. So it is important to become familiar with flags, okay? They are so common that if you want to become a truly successful trend trader, you must get accustomed to trading the flags, all right? Alright guys, that's all for this video. Like I said, there is not much to say about flags because you are already familiar with the breakout concept, okay? Trading consolidation areas in the direction of the main trend upon a breakout, pullback, continuation pattern. We've reviewed already a few videos, and I don't want to, you know, I don't want to get too repetitive. So nonetheless, go back your charts, okay? Scroll back in time, try to find all those healthy trends as per the moving averages, all right, all of them parallel to each other, in order, etc. And once you find that type of price action, you will see, or try to find different flags, okay? I'm sure you will find many of them, okay? And I'm sure once you get accustomed to them, well, you will be able to make money just by trading them, okay? It's typical swing trading, always in the direction of the main trend. It's a very typical and very profitable type of trading, okay? Alright guys, that's all. With this video we've reviewed the three types of price formations I tried myself, ranges, triangles and flags. Sometimes they combine onto each other, sometimes they present themselves alone by themselves. And sometimes you get many, as in this case, many different formations in a row, one after the other one. I'm gonna be talking in more detail upon this topic on the next video, on the next part of this chapter, but nonetheless, like I said, those are the three main elements, the three main price pattern I tried: triangles, ranges and flags. Always in the direction of the main trend, of course. I definitely recommend you to pay attention to breakouts. You could definitely become a successful trader just trading breakouts, okay? Alright folks, that's all. If you have any question, don't hesitate to send me an email. I will very gladly give you my feedback. Bye bye.
So this is Hector. Today is the 23rd of May 2007. It's 8 a.m. Euro time. London market's about to open, and I'm liking a possible setup, short setup on the Euro GBP in the 30 minutes chart. Okay, we're seeing a nice bearish flag formation. Let me draw that properly. It's a nice bearish flag formation, okay, in the direction of the trend. All the moving averages pointing down, parallel to each other, price nowhere near the 100, etc., etc. All the requirements I usually search for as far as the moving averages is concerned. I also like that we have a downtrend line to be placed on the chart. This is today's price action. Alright, this is yesterday's price action. This is the day before yesterday's price action, so we can clearly see higher highs and higher lows, lower highs and lower lows being made in the chart. So I'm definitely looking for a short opportunity here. I'm searching actually for a breakout to the downside of this flag. All right, if I see that we break to the upside, we break the 38% Fibonacci, and especially the dynamic area of support and resistance, I will cancel this setup as usual. Okay, my trade plan is always to the downside. In this case, it's to the downside. Any breakout to the upside will cancel the whole thing. All right. Yes, basically, guys, I'll keep you updated as soon as I get an entry, or in the other hand, we shoot to the upside. Nonetheless, whatever happens, I will let you know. All right. Bye bye. Hi guys, it's me again. Just a quick update. It's been about an hour since the last update. I've just triggered my entry on the Euro GBP setup that I was looking at. We did get the breakout. This is the flag formation I was looking to trade on a possible breakout to the downside. We've gotten the breakout. We've also had the pullback and the continuation aspect. Those are the three aspects I mentioned on my website that I always base my breakout trades on. And as we've just made a new low for the day, I've entered my short entry on my left account. My stop loss is placed up there, and 06814, and basically I'm searching for 10-15 pips on this trade. It's an intraday trade, and anyway, this is the Euro GBP currency pair, which is very slow. Okay. Alright, I will let you know whatever happens from here. Bye bye. Hi guys, this is Hector. Just one final update to let you know that I've closed my trade on the Euro GBP. Okay, that I took about 3 hours and a half ago. If you remember, I was searching for a breakout of this this flag formation, okay, which we got there. We got the pullback and the continuation aspect. I triggered my entry there, and I've just exited a minute ago down there for plus 15 pips. The reasons of why I've closed it is because we have already hit the average daily range for this currency pair, which is 27 pips. Okay, remember that this is the Euro GBP. Okay, it's the slowest of all. It's the slowest, basically, of all currency pairs across the board. Okay, it moves as an average 27 pips. Per day, which is, well, you know, it's basically very tight. It has very tight ranges. Okay, we've already hit that level. In fact, also, if we move back into the 30-minute chart, we can see that the full projection for the bearish flag formation has already been reached. Okay, right there. As you know, full projections are measured from the tip of the pole, okay, to the bottom of the pole. Okay, this is the pole of the flag, and then you add this distance to the retracement tip, which is right there, and it takes you all the way down here. At this level, the full projection was met, the average daily range was met. If I continue, it seems like it's continuing down, to be honest. I exited there. Okay, it seems like it keeps going down a couple of pips more. Perhaps this thing is definitely showing momentum. I could have perhaps trailed my stop behind perhaps the 30 simple moving average or something like that. But quite honest, I'm happy with my 15 pips for this trade because, like I was saying, this is the Euro GBP, and as you know, the Euro GBP, the pip value for this currency pair is double. Okay, it's almost $20 per pip, so I will personally account it as a plus 30 pip profit in my accountancy books, because like I say, yeah, sure, fair enough, this currency pair moves very little per day, but the pip value is double, so I mean, you know, that's also worth considering. Okay, so I will personally account this trade as a plus 30 pip win. It's been an easy ride down. My stop loss, which was placed right up there above the pullback aspect of the breakout, right there, it never got challenged. Upon entry, it just kept on going down and down and down until closing right there. Well, yeah, basically a stress-free trade. I think perhaps this is going to be my only trade today. I'm not quite seeing. I was looking for the another setup in the euro, but well, basically I was searching for a triangle breakout, but it's basically taken off without me. So I very much doubt it's going to give me any.
Hi guys, this is Hector again. In this video I want to record what's a consecution of different breakouts, okay, different pattern breakouts. Basically, when you spot a trend, okay, trends are a very rare asset, okay, they are not that common. They are very valuable, and when you spot one of them, a sound trend, you know, according to the 3 moving averages filter, you want to exploit them all. Okay, you want to exploit all the as long as you possibly can. Every single swing down or offers a new opportunity. You want to, once you spot a sound trend, okay, keep that chart on your watch list. Okay, don't let it go. Don't just exploit one go and let it go. Just keep an eye until the trend finishes. All right. In this example, I'm going to explain one trend that gave out multiple signals, multiple breakout signals, okay? And how by monitoring a trade, by making sure that that trend continues being on your watch list, swing after swing after swing, you'll be able to squeeze different multiple entries upon the same trend, okay? Alright, in this particular case, this is the sterling pound against the dollar. We saw a number 4 different breakouts, okay, one after the other. First of all, we see a flat top triangle, alright, that gave way to the downside, okay. We have a nice move down, a period of consolidation, market taking a breath, breakout, and another swing down, which leading to a flag formation. All right, do you see the flag formation right there? As we've seen already in the previous video, flag is nothing but an ascending range all the way up to the area of dynamic support. There is probably also a Fibonacci level from here to here, alright, for sure. That's probably this around the 61% Fibonacci. You also got the previous swing low acting, or that area acting former support, now acting as resistance, right off the area of dynamic support. That's a nice area to search for a bounce. We get the bounce right there, and then finally we get the breakout, giving out a new swing down, making new lows, alright. Sure enough, we get yet another range, another flag. You see the flag, okay? Another bearish flag, which again leads to another ascending range, overshoots a little bit above the area of dynamic support, resistance, but it doesn't matter because within 1-2 bars we shoot back below, okay? Again, another nice breakout, another rise, nice right down, making new lows, alright? Again, finally entering once again yet another flag formation, okay? You see the flag there? But this flag doesn't quite break to the downside, in fact breaks to the upside, breaking the area of dynamic resistance. The MAs are already flattening. This trend, as we can see, is weakening, finally shooting up, breaching the 100, and the trend is over. But at least we squeezed, you know, at least a couple of decent swings, okay, off the area of dynamic resistance, alright? This swing and this swing. So as you can see, like I say, once you score a profit, okay, you spot this flag, you see the breakout, you trade it, you gather some pips. Don't let this chart go, guys. Don't let it go. It's still valid for a new swing down, and sure enough, it gave yet another entry, another swing down, another profitable trade later on, okay? So like I say, sometimes it's a very common price action pattern. Actually, you see a trend, okay, the moving averages, and then you see price swinging down nicely, each swing down forming a breakout pattern, okay? In this case, 2 of them were very tradable indeed, okay? This one didn't quite retrace all the way to the moving average, to the 30 moving average, and anyway, at this time we didn't have all the moving averages on our side, so I wouldn't consider this as a tradable setup. But this one and this one certainly were, okay? This one, finally, we had some early warnings, such as you see the 30 simple moving average already flat, already closing in, tightening in very closely to the 50,
and well, price certainly didn't break to the downside. Instead, it broke to the upside, triggering the breakout of the 100, and therefore, well, calling the downtrend to an end. But like I said, two nice trades, alright, one after the other one. That's very nice when you can profit a number of times from the same trend. That's the what swing trading, what trend trading is all about. Okay, I'm going to show you another example. In this case, is the Japanese yen. Basically, we see the same thing. We have a nice trend, all right. We have a nice trending condition according to the 3 simple moving average trend filter. We already know about how to recognize a nice trend. This is definitely the kind of market conditions I like to trade. And it's just a matter, once you spot a nice trend, okay, it's just a matter of finding a right entry. Okay, in this case, first of all, we have a triangle. Okay, you see two opposite trend lines. Remember that a triangle is defined by two opposite trend lines having price squeezed tighter and tighter in the inside of the section of the triangle before the final breakout. Okay, this is what we're seeing here. Price bouncing up and down and up within two opposite trend lines, one to the upside, the other one to the downside. Before the actual breakout, we see a formation that we already know: breakout, pullback, off it goes. Okay, we've already seen this before. Anyway, I recommend to search for the breakout, pullback, and continuation pattern of the shorter time frames. It's usually much clearer to spot, okay, to recognize the pattern. So we get yet again another swing down, and sure enough, we enter an area of consolidation, another flat top triangle. All right. Retracing all the way to our favorite area, the area of dynamic resistance. Shortly after we get another breakout, we will have to zoom into the shorter time frames to see if we get the 1, 2, 3 aspects of a breakout. But nonetheless, we do get the breakout. Sure enough, it gives way to another swing down. At the end of this swing, what do we see? Another flag back to the area of dynamic support and resistance, and sure enough, it breaks to the downside. Eventually, the trend is compromised by price breaking above the area of dynamic resistance in momentum. All right, do you see this large green bar, okay, that shows momentum above? Then we see a number of bars closing above the 50. Price is basically meandering above the 50%, the 50 simple moving average. The 30 simple moving average is already flat, and well, I personally would be very cautious to enter at this time of the chart. Okay, I don't know what happened afterwards, but I know I don't need to see how in hindsight what price actually did after this. I don't need it. I already have my warning signals in here. Okay, I already see the breakout of the 50 in momentum. I see many closes above the 50. I am not interested in this part of the chart anymore. Okay, but before having reached that point, we had 3 nice breakouts, especially this one. This one was very clear. Okay, very clear flat top triangle. Nice breakout in momentum, guys. Try to read price action. All right, try to read the a bounce off the area of dynamic resistance, a nice momentum breakout, and sure enough, look what happened. Okay, so once again, like I say, once you spot a very nice trend, okay, don't just profit it from it and scratch it off the table. Keep monitoring that trend, because it might very well give another signal, another valid entry at some point down the road. All right.
Let's go for another example. This case is the Swiss franc, and we see basically a similar scenario. All right, it's another nice trend in market. Okay, moving averages laying out on the chart the way I like them to be. Okay, the way the three simple moving average trend filter indicates. First of all, we see we come from above. Okay, moving averages are falling in place. We see a flat bottom triangle. All right, price bouncing down and up and down and up and down and up, and finally giving way to the downside in the direction of the main trend for a nice ride down. Afterwards we enter another flat bottom triangle. Okay, rather scrappy, to be honest. Okay, rather directionless. It's almost a range. All right, it's almost a horizontal range. You see that? Anyway, gives way to the downside, and we enter yet another horizontal range. All right, down, up, down, up, down, and breakout for a new swing down. All right. You see how basically we are following the same pattern in all the charts that I've been showing you. One swing down or swing up in one swing down or swing up in case of an uptrend, one swing up, a period of consolidation. It doesn't really matter whether it's a triangle, whether it's a range, or whether it's a flag. Okay, it doesn't matter the actual pattern of the congestion area. They are all basically the same thing, just different shapes, but the same price action behavior. Market swings up, pushes up, then takes some moment to breathe, to reassess the direction of the next move. Eventually, if it breaks to the upside, it gives way to another swing up. We have a breakout chance there to ride for a new swing up. Hopefully we do find an entry, and then again another moment of indecision, of market congestion, taking a breath, reassessing our next upcoming move. If we do get yet another breakout in the direction of the trend, off we go to ride a new swing up, and so on and so forth. Okay, as you can see, swing down, congestion, swing down, congestion, swing down, congestion, swing down. It's a very typical pattern. The fundamental part is to spot the trend, and once you spot the trend, spot what price is actually doing. Please go back to the first chapter in the section where I was talking about the trade plans. If you review the first point of the list, it was to basically ask yourself, okay, what's price doing at this time? Okay, you see a swing down, and then you see that we've entered a period of consolidation. Okay, you've gotta learn how to read price. Okay, ask yourself, what is it doing now? Okay, in this case, for example, we've just come from a nice swing down, and now we're taking a breath. Okay, price is taking a breath after a nice swing down, and we are hitting the area of dynamic resistance. What's to be expected from this moment on? Well, from this moment on, if the area of dynamic resistance does hold and we get a breakout to the downside, we could be expecting a future move down. All right, so we do get the move. Let me clean up the chart a little bit. Sorry about that. So we do get the move down, okay, and we enter another period of consolidation. What's price doing now? We've just come from a nice swing down. We are taking a breath. The moving averages are pointing down. They are all in order. We are finding resistance at the area of dynamic resistance. And so what's the trade plan? The trade plan is to trade a breakout to the downside. Okay, it's a very mechanical trade plan. All right, it repeats. It's the same pattern over and over and over. Swing down,
consolidation, swing down, consolidation, swing down, consolidation, and so on. We will keep on exploiting every swing down until eventually we break to the upside. Okay, once that happens, the trend is over, but in the meantime we've profited from every opportunity that trend has given out. Okay, analyze what price is doing. Swing down, consolidation, range, you see a sideways price action. Search for the breakout, guys. Search for the breakout to the downside for a new swing down. Okay, alright, next example, Euro JPY chart in the 4-hour time frame. Same thing, nice trending scenario. That's what the moving averages are for, as seen in the first chapter. Okay, we already know that we are in a trending market. Now it's all about finding a decent entry point. All right, then that's what we are studying breakouts now. Okay, what do we see here? What is that? Well, that's a flag. Okay, once again, swing down, consolidation, retrace to the area of dynamic resistance. It holds the bounce. Okay, it holds the retracement. We don't break above. We don't go anywhere near the 100. In fact, we just touch to the 50 and we shoot back down from there, finding one last one last time support of the flat bottom and giving way for a new swing down. Okay, that's the part we want to profit from. Then this swing down ends in another time of another area of congestion. We are gonna be until we reach more or less, in this case, in this trade, in this part of the chart. In all fairness, we don't quite hit the area of dynamic resistance. So depending on how strict you are with your entries and your setups, then perhaps you wouldn't have taken this trade. Okay, nonetheless, we see the same price behavior. We come from above, nice swing down, market takes a breath, areas reaches the area, or more or less a few pips short of it, a few pips shy of the area of dynamic resistance. We break to the downside, then we enter another area of congestion, in this case forming a very small triangle. Okay, two trend lines, just few bars, formed by few bars, barely 8-9 bars. Okay, it's very small triangle. Breakout, there it goes, until we find we have here another another flag. Okay, very steep in all fairness. But finally, that we are seeing some signals of weakening here. The 30 moving average is already pointing up. Price has been meandering around the 50 for longer than my taste. I don't know what's going to happen in this part of the chart, but nonetheless, I would feel a little bit uncomfortable around this area. But anyway, the important point of this video is to show you guys that once you find a trend in a scenario, guys, they don't happen that often. You will see by yourselves when you begin searching for these moving average formations. They don't happen that often, and when they do happen, they usually give out 2 or 3 possible trading opportunities. Okay, don't just take the first one, pat yourself on the back, tell yourself that you've done a good job, and let this and let the next ride and the next one and the next one go. Okay, go by. Instead, profit from the next one, from the first one. Close out the trade at a profit, reassess the whether the trend is still in place. If it is, don't hesitate to search for a new entry, for a new breakout. Off it goes. Okay, more pips in the bank, and keep on waiting. Okay, keep on searching, scanning, having that chart on your trade on your watch list, because it might very well give out another signal. Okay, as we've seen in this one, in these examples. Okay, we've seen a few chances. I'm not saying you would have taken, or I would have personally taken all of them. I would have to analyze the chart in advance. I don't know if at this precise time there was some news coming out. I don't know if the longer time frames are showing some conflicting signals. But in a nice trending market, you usually get the chance to profit at least a couple of times per trend. Okay, not just once and let the trend go by without taking any more opportunities on it. Okay, like we saw in this case, we saw a few opportunities, few breakouts. We also saw this one, this chart on the USD JPY 4 hours chart. It gave out two beautiful opportunities, especially this one, very clear. Then we had another flag in there. Okay, you see the flag? All right, you see the flag there for another swing down. Once you spot this kind of moving average formations, okay, keep on searching, get one trade, take the money off the table, okay, bank some pips, and then wait for the next breakout. Chances are that as long as the moving average are holding in place, as long as the dynamic area of resistance is holding in place, you will sooner or later get another breakout for a new swing down. Okay, it's the forex, one of the beauties of forex is that trends are very solid. Okay, they are more solid than in the stock markets. They are more solid than in futures trading. Forex is one of the most trendy markets out there, and when you find a trend, okay, they usually give out few chances to ride the market for different trading opportunities. All right, it's not just one trade per trend. Okay, it's few of them. Okay, that's the point of it. Until the trend is over, okay, until you see signals of weakness in the trend, don't hesitate to take multiple entries on it every time they present themselves. Okay. Alright guys, that's all for this video. I just wanted to remark an important point of trend trading. Alright, a trend is usually valid for few signals, okay, for few trades. Keep on searching for breakouts, because it's very common to find a number of consecutive breakouts at the end of every swing down. All right, it's a very common thing. Swing down, consolidation, breakout, swing down, consolidation, breakout, swing down, consolidation, breakout, swing down, and so on and so forth until the trend is compromised. Okay. All right, guys, that was all. If you have any doubt, you would like me to send you my feedback on this or any other topic, please don't hesitate to contact me on my email. It's on my trading blog. I am at your disposal for any question or, well, any trading related comment you would like to make. All right, bye bye.